Today I want to show you guys how I'm able to catch the moves in the markets and how I do it, and pretty much the exact processes which I use. So hope you guys enjoy, and I hope this video can help. This idea that you can time the highs and lows of the market with extremely high accuracy with indicators is complete rubbish, and I've been doing this for about a year non-stop. So I want to tell you why it's rubbish, and the fact that these indicators lag and they're not up to date and they're just garbage. Okay, I want to tell you, and I just want to show you why in the charts. So I hope you guys enjoy. Okay, so I'm going to look at the RSI first, because the RSI is a very popular indicator and everyone uses that one. So I'm going to go through the RSI and then the market cipher and then possibly MACD. Okay, so a lot of people think that using indicator is a complete strategy which will make you profitable. It's a lie, and I want to show you. It's going to get you wrecked, and a lot of people preach this idea that you can time the markets with it. And I'm not going to say that indicators are garbage, because they definitely can give you a good bias. Now, as you can see, this is the 4-hour chart. The higher time frame you go on like indicators, the more accurate they are, generally in trend direction. Okay, so for example, if the indicator, for example, is in this higher band, then obviously you'll be looking for shorts. Don't be like, I'm gonna long here. Okay, so that's just, as you can look here, so top of the bands, top of the bands, top of the bands, top of the band, top of the bands, etc, etc, etc. You get the point. I view indicators more as a biasing tool. Now let's just show you how you could get wrecked. Okay, so here, this is no entry. Right here is not even an entry. So for the RSI to get a good entry, you need to be out of this lower band here, and that will give you, okay, well, look for a short now. Okay, so right now we're just in the higher range. Okay, same with this one. This is 4-hour chart, by the way. I'm going to go down on lower charts too. Now what happens here is we do go out of the band, right? So you go out here, and a lot of retail guys would firstly take a trade here. They'd see, oh, we're out of the band, cool. And then what happens then? You get stopped out like 3 times. If you do a few trades, you get stopped out. You go lower. And the reason you go lower is there's multiple reasons, but you're taking out liquidity, there's probably levels there, there's order blocks, so on, etc, etc. And in this indicator does not give you a good idea. So you go out, and then you also you go down even more, and then you take the stops out, and that's just going to wipe you out. Okay, now they're also pretty garbage at predicting like scalp moves and stuff. But see, this one, I remember this trade. You had like an order block from this lower region, and there's a lot of trades within this lower part of the chart, and people shorting were wanting to escape. So that when they go to break even, they go to buy. So then booms price up, and as you can see, they did it like 12%. So that's a very big amount, right? And this thing barely moved. Okay, so it's like pretty garbage. Anyway, what happened here? Well, as again, you would have got wrecked again. So you came out of the indicator, right? You're over here, and you're here. So, in respect to that, that's shorting here. And you don't want to short with a stop loss that's 2.8%. And okay, like that's pretty bad. Unless your your ratio to your P&L ratio is much better, but not your P&L, your risk to reward ratio is good. I think you can trade this if you're a professional, but you don't even need these things. You can use better levels. You can use other sort of indications and tools to your advantage. But it's just trash. Now, you can see here on this leg, you did go up again, and that was the move. So you would have got stopped out if you did the first one, and the second one you'd be fine. All right. Now, according to the bottom here, okay, so you would have placed a trade here. 1.7. You could have made a profitable trade here. I do believe you could have made a profitable trade here, but then again, I think most people wouldn't have taken profit, and then they just get stopped out. And then look at what happened again. So you place your trade here. You had a 4% move. People would have taken profit there surely. I mean, but a lot of retail folks don't. And then if you didn't, you would have got stopped out again. So, it's like this thing isn't predicting exact bottoms and tops, but it can predict roundabout regions, and that's what it's good for. So I'm not going to sit here and bag indicators and say don't use them for anything, because I think they have a time and place, and that time and place is within the correct, you got to use it correctly, and not like be like, okay, I'm gonna place trades off this. You just got to think, okay, we're in the higher band. Okay, look for shorts, and then refine your levels using volume nodes, point of controls, everything. Okay, so that's it. Now I'm not going to go and do everything. Now let's just drop down to 2-hour time frame. On the 2-hour time frame, let's just start from this point in the chart. I find it's very washy. The lower you go on these RSIs, it gets very washy, and then it's very hard to read. So here, it's just stop out territory. That's really what it is. Firstly, you're going against the trend in these types of situations, but it's just really just stop out. Just take your stops. Retail guys will not be able to trade this. It's very difficult. It's very hard. Okay. Now, these lower bands, you would have got stopped here because it went down lower, and that's just that. Okay, you get the point. It's just trash. Okay. Now let's go to actually one more thing. I just want to go to the lower time frame so you can see how hard it's very washy. So the 15-minute, it's very, it looks easy to trade when you're actually looking at it and you see, oh, it went out of the band, okay, it went down. But when you're in the moment, it's a completely different story because you got to figure out stop losses. And when the chart's already defined, you can already figure, okay, oh, my stop loss would have been there, and that's that's not a good way. You can't trade off that. That's just not gonna work. Okay. So let's go to the divergence one. So this is going to give you, it's like market cipher, but the free version. It's pretty much the same thing anyway. Now this one is similar to RSI, but it can tell you the money flow, which is, I guess, all right indication. And when you get this thing right here, so that's green, and then green on the lower band too, that's like an indication that the bottom is probably in. And as you can see, it's been pretty right so far. So you can definitely view these indicators as something to use as for spot and be like, okay, if it goes here and does this, I'm gonna buy and just hold. If it's spot, you don't have to sell, just hold. There's no stop loss, there's no leverage. So that's the good thing about it. Now, how do I catch the highs and lows of the charts? So for my trading strategy, what I like to do is I like to get a bias, right? And my bias is mainly derived from TRDR and market structure, okay? So let me just zoom out for a second. So as you can see, when we have a large congregate of green or red, that will generally assert my bias. So if we're here, for example, let's take this. So we have a lot of green bands and a lot of yellow bands, and the yellow bands mean they're stronger, okay? So it's got to do with like the way I've set the settings. That would mean, and the order books are also green, that would mean I'm leaning more bullish. So as you can see here, I'm more bullish here, I'm more bullish here, and I set my bias based on this. This is not a straight strategy. This is just telling me, okay, I'm gonna look for longs, and then, yeah. Okay, so as you can see up here, it's red. Here it's red, 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 like intraday type trades, red, red, red. It's pretty good at picking around about areas, okay? So that's like the main use case of this, I wouldn't say it's an indicator, it's more of just an analytical tool, okay? I would use Exo charts for like refined entries, but that's another video for now. Okay, so what I like to do is I like to do all my levels, which is my daily, monthly, weekly levels, okay? Then I like to note out my point of controls, my naked point of controls, all this kind of stuff. Now, as you can see, we've already tapped the daily naked point of control already down 0.6%. Now that could have been a trade, probably not. I don't think I would have taken it. Okay, so I think this move is going up with quite strength, and I just don't, even though it can easily go down, I don't feel comfortable shorting because the CPI data came out and, inflation's lower. So I don't really want to go against that. Now, what I like to do, and I'll show you exactly how I took a trade. I'll just go to my Twitter because I have the trade setups there. And if you want to follow me on Twitter, I have trade setups there. You can follow me on there, and you can look at the trades I'm taking and so on and so forth. So what I like to do, let's just go to this one for example, is this was on the 27th of the 5th. No, not the 5th. That would have been, I did that date wrong anyway. That was okay, I got my dates wrong. Anyway, basically for this trade, as you can see, I marked out the regions which I'm looking to take a long, sorry. And I've noted that there's a daily level here. There's a Fibonacci, so the .618, which is in trading, that's known as your golden zone. So it's like the zone where I guess the bots are programmed or something like that. I don't really know, but I've just noted, and everyone uses it, and it generally works if you do it right and there's other confluences with you. Now, if you guys want to know more about how exactly I'm taking trades and live updates, you can follow me on Gun Traders, which is like my trading channel, like my full trading channel. So it's not really like, you know what I mean, full trading. It's just like I go more depth. And as you can see here, this is the plan I kind of derived. So I see a volume node here. So this is a volume pocket, a Fibonacci and a daily level. And then I also see a swing low, which can be taken out as liquidity. Now, I'm thinking, as you can see in the sketch, I'm thinking we're going to just for a little bit of retail, we're going to hit the level, go up a bit, and then go back down for the swing low and take it out. Now, what happened there was pretty much what I said, okay? So, here's what happened. We came down, right? Hit the level, bounced up, came down, took the lows out, and then went up higher. Now, obviously my timing was a little bit off in that, but that does not matter. It's the way you interact with price that really matters, and that's how I essentially take trades. I look at the way interaction and the way the price interacts, okay? So if you want me to refine my strategy, what is it? It's really just getting your levels down packed, and this takes time, okay? Levels down packed, Fibonacci down packed, and volume nodes down packed. Volume nodes are used with fixed ranges, understanding where volume is placed, liquidity regions, and that is essentially the strategy. There is not much more to trading than that. People overcomplicate it. You can't, it is very complex, but it takes a lot of time and intuition and understanding to understand how this works, okay? But you don't want to overcomplicate it, because then there's only a few ways it can be, and the reason people lose is they just use garbage indicators and so on and so forth, okay? So this is the trade that I took, what was it, last night? Yeah, this one was last night. So I was looking for a short, and I was using volume nodes. I was using this the 786 and the daily levels. Obviously, this was a trade that was a bit risky because you're counter trading the inflation data, but it's okay. If you know what you're doing, you'll be right. So obviously my stop loss was up there for the swing high for a potential swing play pattern, which you did get, and there was actually 2 trades in this region. So this is what I did. I took that one, okay, so I saw the reaction there, I took that, and then we got a nice 4% move down, and then I took that one, which is a swing play pattern of the high. Now, I didn't get stopped on any of these trades because, as you can see, I've set the parameters, and I said, well, my plan was this, you know, we're going to take this high out, we can do this, either way, I'm going to take this trade, and I think it's going to be right. So obviously now we've shot up higher, but TP1 hit, take profit 1 hit, profitable trade, either way, okay? Now, another region I want to show you is this one here. So, for this one, I was using the 786 and the local swing play pattern, so the swing play pattern of this previous high. And the reason you use these previous highs is because there's liquidity above these regions. People put their stop losses there, and when people put their stop losses there, you can easily take the stop losses out, okay? Well, you're not easily, the market does, and it generally likes to do that, okay? So it's all about chasing liquidity. Now, as I said, I'll be looking for a market structure change here for potential short, if not provided no trade taken, okay? So we did get a market structure change, and the level was entirely respected. Now, the reason this happened is because we had our levels here. We had this liquidity, we had the 786. Now, I don't like to place too much trust in levels like 786s and Fibonacci levels like that. I'm more volume and liquidity, and as you can see here, you know, we got the respect. It's all about the respect, as they say. Now, for this setup, this is a scalp setup I took. I just want to go over these regions because my whole trading thing is levels, Fibonacci, and volume, and then additional stuff which I use, like you can use trend lines or whatever, but you know, if volume's the big one, and I want you guys to understand that volume is the big one, so you're like taking out liquidity and so on and so forth. This is my plan here. We had a volume node here. We had stops above these highs here, so obviously something around this region would look alright to short. Sorry for the back there. To short. Likewise, we had different confluences down here, okay? So what ended up happening in this region? Well, we went up to the highs, took out the stops here, but we did not hit the exact point of control here, but we hit a volume mode, which was down here. And look, that's, I guess, that's pretty accurate. Like, that's the thing about this. I'm not going to get the exact high and low. Like, that's impossible. You can't do that. But it's about predicting the main areas. Now, if you guys, this is the channel, by the way, if you guys want to look at it, it can help. It can help if you want. And obviously, I'm just documenting my trades. I think it's a good thing to do. I'm not really too, I don't really care. I obviously want to develop like a community of traders, but you know, here's what it is. We'll see what happens. What else was there? There was Ethereum. Let me just check that out. Ethereum. Oh, and this one was another one. This was like liquidity grab. So liquidity grab and then the VWAP from the high. So that's good, and that would reaffirm you for that trade because you're in a downtrend too. So yeah. Anyway. Oh, this also side thing. This was a really cool fractal I pointed out. Where is it? This fractal was, yeah, so this fractal here was very well respected. Yeah, there it is. I did draw it out earlier. I'll see my Discord, I think it's here, yeah. So basically, this is what I was envisioning. So this side sort of thing, it was a fractal from a previous range. And then what we did get was that very nice, you know, we went down levels. Anyway, I hope you guys enjoyed this video. And I hope you guys understand why I think indicators are trash. And, well, not trash, but they're biasing tools, essentially. So don't make a trading strategy off them, alright? Learn about levels, volume, Fibonacci, and so on and so forth. Hope you guys enjoyed this video. If you want to see more, make sure to subscribe. And you can join my Discord too. I'll link that in the description. And I'll just be like doing my trade subset too. So hope you guys enjoy and see you later.